When you look at exactly what's going on in the M&A deal, is it because people are worried about where revenue comes from and so they think bigger is better, or is it actual companies that can find synergy and value?
Well, thanks for having me, Francine. I think that, first of all, M&A remains a feature of the market. I think that the dialogue with our clients is very good. Our clients want to do deals. And when you look at the overall levels of activity in the market, I think it's also, very good. The market is down 12% or so relative to last year. But the first half of last year was arguably the best ever M&A market. So to be only 12% down on that metric, I think is very good. The market then decelerated last year. So I think that by the end of the year, we might come to a level pretty close in terms of activity relative to 2018. I think that what is interesting is to break down where that activity in 2019 is coming from, where what we find is that essentially the volumes in North America are flat, and the volumes in Europe and in Asia are down about 30%. And furthermore, if you look at...
How do you explain that?
You explain that by the size of the deals, because if you look at overall deal count, the number of deals that we observe in the market, whether it's North America, the rest of the world is down about 25%. The issue is that there's been a crop, a vintage of transformational deals of a value greater than 10 billion, which has been dominated by the US. So far this year, we've seen 25 deals greater than 10 billion in value, and of those, 21 have been US deals.
But what does it mean? I mean, do you take the, at face value, is there good M&A and bad M&A? So M&A that you do for the bad reasons and M&A that you do for the good reasons. For example, if you look at geopolitics and the fact that people are nervous, does it spur them into more M&A or less M&A?
I don't think I think there's always good and bad M&A. I think that the critical difference in this market is that the regulatory challenges to M&A are significant, particularly on a cross-border basis. And when you look at the reason why we're seeing so many deals in the US, I believe is because the regulatory issues in US deals are much more predictable than if you're competing in the global arena cross-border.
You mean because of regulation or because of the supply chain?
Regulatory issues, antitrust, industrial policy, trade wars. The overall regulatory environment is just very complex to do cross-border deals. If you focus within a US context, it's much more predictable and manageable.
Okay, how are these funded? So if you look at these record low interest rates and the fact that we had another bout of central bank dovishness, does it help spur M&A?
I mean, cheap funding definitely helps for M&A. However, what I would say is that another key aspect supporting US deals is that, we can argue that market prices are currently, very full. And what I would say is that if you look at deals that can be funded using all stock currency, that to some extent compensates for market prices. It's much easier to structure all stock deals within the same region, within the US, than in a cross-border context. Are
there a lot of companies that want to do M&A in France or other parts in Europe, but are afraid so because of political interference? I'm thinking of, Chrysler, Nissan. You could think of, Siemens, Alstom, and others.
As I said, I just think that that regulatory environment, antitrust approval, political influence in the deal is much greater when you look at any number of these different, jurisdictions. And I think that CEOs are more hesitant when you see deals like, Alstom, Siemens that were supported by the French government, they were supported by the German government, possibly for good reason, were blocked by the EU. But when you see those kind of deals being tripped by regulatory overviews, that gives greater hesitations, to CEOs to pursue those kind of deals.
Okay, what do CEOs ask you, the most? Are they worried about the trade war and the impact it could have on actually how they make business? Look at Apple; it's moving things around. Yeah. So are they worried about acquiring something that then, gets targeted?
The CEOs ask me the most about these regulatory challenges, meaning, I want to do this deal. This deal makes sense. How long is it going to take for this deal to be approved, if it is going to be approved at all? Is it going to take 3 months to be approved? Great. Is it going to take 18 months to be approved? Not so good. So all the discussion that we have with CEOs is beyond the nature of a deal, beyond a deal making sense, is this deal going to get approved or not?
Is there an industry that is still ripe for consolidation, like major consolidation?
I think, when you look at the crop of deals that, we've seen in the U.S., defense, United Technologies, Raytheon, a lot of healthcare, BMS, Celgene, the Danaher deal in industrials, in oil and gas with the Anadarko Oxy deal. I think that we see scope for consolidation, in every sector. I think that the warning for non-U.S. companies is that if this trend continues, where U.S. companies continue to pursue these transformational deals, and companies in Japan, companies in Europe stand back,
right.
The question is, it's a warning. Could this lead to a situation where some of these European, Japanese companies, in time, lose their relative competitiveness?
So do you think that actually a lot of these Japanese companies, I guess other Southeast Asian companies, and also European companies want to be part of the M&A deal because they worry that then they can't compete because the others are too big?
I think they very much want to do that. The issue is that there is this regulatory challenge, this regulatory uncertainty, and what we have to do is work with our clients to think through these issues, to avoid any surprises, and to just get these deals across the line.
But just to make sure I understand, these regulatory issues, are they because they're flawed, because regulators are slow, or is it just the way things are?
It's just the way things are. I mean, we're just in a complex environment. There is rising industrial policy in different regions. I think regulators are becoming a bit more, unpredictable. And we see that any of these large transforming deals, they take longer and longer to be approved. And it's very different for a CEO to know, I know what I'm buying today, but if the deal's not going to be approved, if it is approved at all, for 18, 24 months, that company might look very different. The market might look very different.
Okay, are the European banks ever going to consolidate?
That is a complicated puzzle with many different pieces, and I think that in due course they will. It's tough to see something short term.
Okay, and Brexit, what does that mean for your UK companies?
I think Brexit just adds to the whole recipe of uncertainty. I think that for the time being, we see that one of the reasons why volumes in Europe are down also is because the biggest market, which is the UK, is a little bit on a standstill. I do think that fundamentally UK companies need to diversify regionally, become more exposed to different regions, and I think looking forward, once we get through and we understand the rules of the game, I don't think that my clients think that Brexit is good or bad. They just want to understand the rules of the game and apply those rules to, in this case, external growth.